The sun has got his hat on. Hip 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 hooray, the sun has got his hat. Oh, you bugger. Hot. Well, how do you find a hot product? Let's go on the study and we'll find out.
Wait.
Matron, take them away.
And a warm welcome to one and all. And if this is your first time here, I am the big fella that is the Scruffy Trader. What I'm trying to do is put trading in the real world. So if that sounds good, crack the like, do press the little subscribe button. Genuinely helps and motivates me to do more. And if you want to see some more, turn on the bell icon and drop in the description and find my Twitter feed. So where are we going today? Hot products. What's that got to do with a slice of bread? Well, your product can be a number of things to a number of traders. Now, some traders will trade everything. I trade a lot of products myself, but you might only trade one product. So that one product could be your hot product. But what if you want to trade multiple markets? How do you know which ones are hot? Well, it's not as difficult to work out as you think. Now, in the comments this weekend, I had a great comment from Erna. A little salute to you, my friend. And the comment was excellent. Here it is. Because it was asking, how can you become a regular trader? Because you can trade whenever you like, and sometimes you can breed being lazy of just, I'll just switch it on and have a pop. That's not really trading, that's taking a punt. So the tip I would give in response to your comment is something I give everybody, and it's something that I do personally myself. That is, I treat trading as a job. Now, if you have that in your sort of forefront of your mind, it can help you structure what you're doing. Because when you have a job, most of the time, you will go to work same time every day. And I appreciate the shift work for those that will drop in the comments and go, well, I work different shifts. But basically, you will have a time to yourself that is roughly the same every day. Now, if you can imagine that for, say, just 2 hours of the day, that is your job. Now, this can be done sort of after work or before work, so you can find an overlap where you have this spare 2 hours, if you like. Might even only be an hour. But what does that give you? It gives you time. Okay. So the job has come into a time when you can trade. Now, if you've got limited time, I suggest you swing trade. Why is that? Because when I'm swing trading, I look at it at the top of the hour at 8 o'clock, which is normally the 4-hour close, but I do it between 8 and 9 because I know the markets are calming down. And I can just flick through on a 4-hour chart. I can see whether I want to trade or I don't want to trade. Don't need a lot of time for that. When I'm day trading and I'm looking to basically get in and get out, I need to analyze the market to understand what it's doing. And sometimes an hour isn't enough. I might need 4 hours to do it. In other words, I can analyze, see what I'm after, and then I have to wait for the conditions to come into play, enter, manage, get out. Right? It's done quite quickly. I do use pending orders, which helps me, but I like to see it if I'm day trading. If I'm swing trading, just put my order in, I'll look at it again tomorrow. So where does the products come into this? Well, it depends on the time that you're looking at. If you're swing trading, don't matter. You can trade any product you like when you like, because you're expecting it to take 24, 48 hours to a week to a month. Okay, but if you're day trading, that becomes slightly different. So the first thing I would do to filter the products out is I would look at an indicator called the ATR, the average true range. And I would also look at it on a day chart. So I know you scratch your head and you go, well, if I'm trading off a 15-minute chart, what's a day chart got to do with it? What it will give you is the breadth of market. Okay, so sort of the top of the market, the bottom of the market, and you want a good gap between them, say 100 pips. Why is that? Because it means it's moving. If there's a small gap here and you're coming into it on a narrower time frame, you may have already missed the move. So you're better off looking at big moves. Now the products that can do that are very easy. You know, cable will do it. Pound JPY will do it. Oil will do it. DAX. There's plenty of products out there that can do this. But there's still lots and lots of products that run at an ATR, sort of certainly 70, 100 plus. So how do you filter all of them down? Well, that depends on your location in the world. And my advice is try and drill it all down into just 3 pairs, or 3 products rather, and look at it like this. Now, depending on where you are, you have the Asia session, you have the UK session, and you have the US session. Okay. Now, the one in the middle, the UK one, is the most buoyant because it has overlaps. Now, an overlap is where one market is shutting and another one is opening, and they open roughly around the same time. So for London, when it opens at 8 o'clock, there is an overlap of Asia, it's closing down. You've got the European markets, Germany, which opened at 7 AM, and then you've got London itself opening at 8. It all clashes roughly around the same time, and all Marielle breaks loose. So personally, I don't trade between 8 and 9, and I certainly don't trade between 8 and 8:30, because anything could happen. All right. Then you've got the US session. Now that overlaps the UK again because it opens at about 2:30 my time, and London don't shut till 4:30. That runs on to 9:30 at night. Then the markets calm right down, and then we start again with the Asian session at around 11 o'clock at night. This is assuming you're in the UK like what I am, but you can have a look at the world clocks and see how they work. So what advice would I give? Well, depending on when you're awake and when you're going to trade, you can see which one of these 3 sessions you're going to be awake and trading with. Now, if it's an Asia session, say it's late at night for me, I am looking for the central banks that are open over there. So I want a pair that has JPY in it, Aussie in it, New Zealand. I want indices that are running. So that would be AUD 200 or the Nikkei or the JAP 225. There's a quick basket of stocks I can look at. If I'm in the UK, I want GB pairs. I want Euro pairs. I'll look at the FTSE. I'll look at the DAX. Might even look at the CAC, the French indices. All right, simple stuff. If I'm in the US, obviously USD, the CAD, S&P 500, the Dow, US 100. Plenty of products to choose from. So you can make a basket based on time. And if you can't figure it out, there's also what's called world drivers, that no matter where you are in the world, they're going to be bought. And they are commodities. And the main one is oil and gold. You could trade them whenever. So if you're segueing down into just 3 products, you can have an indices, you can have a pair that you like, and you can have a commodity that you like. 3 different assets that will move in sort of different ways to each other. So if you are trading one way, you can maybe look at another product to trade a different way, because they are different. You know, you've got to be, well, saying that the US dollar is closely tied to gold, but if you understand correlations, you'll then be able to do your hedging as well. But what I'm driving at is you'll be looking at 3 different products, and that will suit you down to the ground. And that's all you need, guys. And if you just look at those 3 every day at the same time, you'll start to see patterns in the movement of that asset. I hope that makes sense. But advice wise, clean this down. Okay. Treat it as a job. Trade at the same time. 3 products. And it's based on an ATR. But then you can also use your ATR to not only help you with your stop, but help you with your target. And that's a video for another day. There is videos on this. Do check the channel out, you'll find it. But basically, if the ATR is this big, don't target this big. Target that big, because then it's safe and you can find it within that movement. And you'll find you're a lot more profitable and certainly a lot more consistent. So just a little quick one. By all means, drop your comments below. I do try and answer every single one of them. And if you're stuck, you'll find all of my details in the description, and you'll also find a few useful links there as well. So as always, guys, well, risk managed, but above all, do what you love, and the money will follow. See you all in the next one.